Owing the IRS is a scary position to be in, so you should know the basics when it comes to the collection process and your rights.
Welcome to this episode of Accounting and Tax Tips. Smart strategies for small business success with certified public accountant Tina Moe.
When you file an income tax return with a balance due and without payment, you will receive a written notice from the IRS with the amount you owe. This initial bill kicks off the IRS collection process, which will then continue until your account is paid in full or until the IRS may no longer legally collect the tax, for example, when the time period for the collection has expired. The first notice you receive will be a letter that explains the balance due and demands payment in full. It will include the amount of the tax plus any penalties and interest added to your unpaid balance from the date the tax was due. If you're not able to pay the balance in full, it is in your best interest to pay as much as you can with the notice and contact the IRS immediately to request a monthly installment agreement, either by phone or with Form 9465. But note, any unpaid balance will continue to be subject to interest and compounds daily and to a monthly late payment penalty as well. It is in your best interest to pay your liability as soon as possible to minimize these additional charges. If you fail to pay your tax voluntarily, the IRS will escalate their collection efforts to include filing a notice of lien, serving a notice of levy, or offsetting refunds which you're entitled to. So what is this exactly? What is the lien process? The federal tax lien is a legal claim to your property, including property that you acquire after the lien is filed, and occurs within 10 days after they send their first notice of taxes owed and demand for payment, and the tax is assessed. This action will have an adverse effect on your credit report where it will remain for 7 to 10 years. There are a few situations where the IRS will withdraw the lien. For example, if a notice of lien was filed while a bankruptcy automatic stay is in effect, or if the lien is found to have been filed too soon based on IRS procedures, or you enter into an installment agreement to satisfy the liability. The IRS may also use a levy to collect taxes. The IRS may levy assets such as wages, bank accounts, Social Security benefits, and retirement income. The IRS may also seize property for the purpose of selling to satisfy a tax debt, including cars, boats, real estate. In addition, any future federal tax refunds or state income tax refunds that you're entitled to may be offset to apply to your federal tax liability. You may call the IRS at 1-800-829-1040 to discuss your bill. Be sure to have your records with you when you call. You have rights and protections throughout this collection process. You should refer to Publication 1, which provides additional information on your rights as a taxpayer. More information on the collection process and your right is available in Publication 594, the IRS collection process, and Publication 1660 on your appeal rights. You may also contact them by website, www.irs.gov. For more information or representation if you owe the IRS, visit my website at www.actservices-inc.com.
Thank you for watching this episode of Accounting and Tax Tips with Tina Moe. For more great information, visit Tina's website at www.actservices-inc.com. Also browse the other shows found right here at Indie Biz TV Shows.